Good morning, marketeers. Let's talk money. There's one word that keeps coming up when talking about the economy: stagflation. That's when prices keep rising, but economic growth slows down, a combination that no one wants. Economists worry that tariffs are making inflation worse while also stopping consumers from spending, which slows down the economy. Let's break it down. Tariffs and the auto industry. U.S. automakers like GM and Ford have been warning that tariffs could raise car prices by $4,000 to $10,000 per vehicle. So, the U.S. government gave them a temporary break, but just for 1 month. That means if you're looking to buy a new car, you may want to do it before those tariffs kick in. Wall Street and rate cuts. For months, investors were begging the Fed to cut interest rates. Now, not so much. Here's why. When the Fed chooses to cut rates, it usually boosts the stock market. But when the Fed has to cut rates because of a slowing economy, that's not as good for investors. Now, let's check out the markets. Stock market update. Dow, up 1.14%. S&P 500, up 1.12%. Nasdaq, up 1.46%. Sneaker stocks and retail trends. Foot Locker beat earnings expectations, but sales were lower than expected. Meanwhile, Nike is offering more discounts to boost sales after its stock dropped nearly 30% last year. And while Nike is struggling, Adidas reported a 19% revenue increase, showing that its comeback is in full swing. Tariffs could hit your wallet. Tariffs aren't just affecting cars. They could raise toy prices by up to 50%, according to Hasbro. That's bad news for parents getting ready for birthdays or holidays. And if you were looking forward to fresh fruits and vegetables from Mexico, Target CEO says tariffs will drive up grocery prices in the U.S. Germany's economic revival plan. The German economy has been struggling, but leaders have a plan, spending big on transportation, energy, housing, and defense to get things back on track. Despite all the economic challenges, German stocks hit a record high, and the euro is gaining strength against the dollar. The housing market heats up. After months of slow sales, mortgage rates just dropped to their lowest level of the year, and buyers are jumping back in. Mortgage applications rose 20% last week, meaning we could see more homes selling as the weather warms up. And if you're thinking about selling, spring is usually the best time, but that could change depending on where you live and what mortgage rates do next. Crypto and TikTok. Bitcoin is back above $90,000, rising 3.46%. Meanwhile, Reddit co-founder Alexis Ohanian is interested in buying TikTok, but with a twist. He wants to turn it into a decentralized platform, meaning users, not TikTok, would own their data. It's a big shift from companies like Meta, which make billions by selling user data. Bitcoin miners are struggling. Bitcoin mining profits plunged 57% due to the latest halving and price declines. To make up for it, miners are renting out their powerful computers to train AI. But this strategy might not last, as some AI companies are finding ways to use less computing power. That's it for today's Money Minute. Stay informed, stay invested, and I'll see you tomorrow.